Hey everyone, Dell stock has experienced some headwinds following the company's quarterly earnings release. So I've put together a review of the big picture items that I think every Dell stock investor should know regarding what's going on and how it's developing. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Okay, so Dell CFO Yvonne McGill talked about what happened in the quarter and why investors are disappointed. I want you to know some of those big picture items that's causing Dell stock price to have some headwinds. So starting with the company talking about their traditional business, saying that it has stabilized and then AI continues to drive growth. So Dell has the consumer side of the business and the server enterprise side of the business. The traditional business, they mean the consumer business, that is stabilizing, it's not growing. The AI business, the server business, that's the part of the business that is growing. So gross profit margin in the latest quarter came in at 4.9 billion or 22% of revenue. That was actually down 250 basis points, which is 2.5%. And the reason that was down is because of competitive pricing and higher AI optimized server mix. The AI servers are not as profitable as the other parts of Dell's business, and as that contains more of its business, it's bringing down its profit margin. And investors dislike competition, especially competitive pricing. You've heard me talk about how destructive competition can be to a company's business, its profit margins, and you're seeing that again here with Dell being the latest example. Profit margins down despite the fact that overall revenue was up in the quarter. Management saying that operating income was 6.6% of revenue and 1.5 billion, and that was down 8%. Server demand was even stronger with growth across traditional and artificial intelligence, and their AI optimized mix of server demand increased again. That part of the business is doing well. Dell, remember, you've got the traditional servers and then you've got these newer AI optimized servers, and they're both growing for Dell, and that's been the bright side of the business. Revenue was up 22% in that segment. That's really driving the growth for Dell right now. So the company saying that commercial PC demand was low, but it improved as they progressed through the quarter, and they remain bullish on the coming PC refresh cycle and the longer term impact of artificial intelligence on the PC market. So I've been talking about this for several years now. Well, I should say a year and a half, close to 2 years now. The personal computer industry boomed during 2020 and 2021 when everyone was working from home. And then there was a gap in 2022 and 2023. And now, 2024, it's beginning to rebound. Nearly every participant in the PC industry is expecting low single-digit growth from the PC industry in 2024, and then even faster growth in 2025, and then faster growth in 2026. So that refresh cycle is going to be turbocharged by the fact that these newer PCs are going to have some AI benefit to them, some AI enhancements to them, making them more attractive than computers have been in the last decade or so. So in the first quarter, the company repurchased 6.7 million shares of stock at an average price of $108 per share. It's usually a good sign when a company's management team is buying back stock. That signals that the company feels their shares are undervalued. It signals that they feel they have good prospects ahead, and they're buying back their shares to reduce the outstanding share count. Looking forward, they expect the AI momentum they've seen over the past 3 quarters to continue, driving incremental revenue for the year. They expect Dell Technologies fiscal year 2025 revenue, that's the total company revenue, to be in the range of 93.5 to 97.5 billion, with a midpoint of 95.5 billion, or about 8% growth. That's solid growth from Dell. Dell is not a fast-growing company to begin with, so growing near double digits is a healthy growth rate for Dell. So they expect the infrastructure service group to grow in excess of 20%, fueled by artificial intelligence, but the CSG business, the consumer goods business, to grow in the low single digits for the year. And that's along the lines of what I've heard from Intel, what I've heard from Micron, what I've heard from Microsoft, and others in the personal computing industry. They expect low single digit growth for 2024. Here's the bad news. Management saying that given the inflationary input costs, the competitive environment, and higher mix of AI optimized servers, we do expect our gross profit margin to decline roughly 150 basis points. That's usually a bad sign when you have a company saying that their revenue is going to grow by 8%, but that their gross profit margin will decline by 150 basis points. That's really a sign of rising costs, like the company mentions, but more so the competitive environment. And I've been seeing this from server companies. One notably, Supermicro Computer, is also taking a introductory pricing approach, meaning they're offering lower prices as well to gain traction in the market, and they're hoping to gain market share. And that's causing some some decreasing profit margin in the industry, because when one company is taking a strategy of gaining market share, other companies respond, because if you're selling your products at a lower price, then this company, your competitor, realizes you're selling at a lower price, so they come down to either match or beat your price because they don't want to let you take market share. In most cases, that's the response. In this case, it looks like Dell is matching and lowering prices as well to gain market share, and it looks like that's having an impact on its gross profit margin, but thankfully it's also leading to increasing revenue. Sometimes you have competition so fierce that you lower your prices and it still doesn't lead to revenue growth. And that's partly what's happening in the electric vehicle industry. You've seen Tesla slash prices 6, 7, 8, 9 times, and they're still experiencing revenue decreases because competition is so fierce that even after cutting prices, they're still not generating growth. At least for Dell, if they're cutting prices to meet competitors' prices, they're still generating growth. They're expecting 8% growth for the year. So that's the good news. The bad news is that this growth is not leading to increasing profit margin. And that's the big difference between many of these AI players. NVIDIA is creating a halo effect around the industry. But the big difference between NVIDIA and seemingly everyone else is NVIDIA's growth in revenue is creating a surge in profit margin. NVIDIA is selling their products at full price, and customers are waiting in line to buy. Whereas with others in the industry, including Dell, Supermicro Computer, and so on, they're getting a bit of a boost in revenue. Supermicro Computer is getting a big boost. Dell is getting a smaller boost. But that's not leading to higher profit margins. So that's the big difference here. And so that's something to keep an eye out for regarding these AI companies. So I thought this was a great look into Dell's business and really what investors should know about Dell and understand for the reasons why the stock price is going down. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.